Last thing here that we're going to touch base on is a couple questions from the arena, right? So we had two little things. And again, I will encourage everybody to engage in the arena, right? Hedgeye Nation is an absolutely brilliant with their time and willingness to help each other get better, right? So a rising tide lifts all boats. I really think it's a key mantra here within Hedgeye Nation, is really kind of helping each other out. Unlike the old wall, who really would want to kind of stab each other in the back, we're really trying to make sure, or try to get everybody to execute at a higher level and execute more efficiently within their portfolio in order to try to stick with those core fundamentals of preserving, protecting, and compounding one's capital. So the first question was really, some of my biggest misses are selling, covering at bottom risk range, only to see it drop further. Missed 50% last down move. Thanks, Ron. So Ron, I've touched base on it a couple times a day, and certainly over the last few weeks. But the biggest thing there is obviously maintaining your minimum position sizing, right? So if something continues to move lower on you, not making sure that you have those defined rules in place, right? So make sure you define those rules so that so if it's a core asset allocation, I'll just use XLY XLK as an example, right? That we've been short. I believe it's since about April. Might be a little bit earlier than that, but April's sticking in my mind. Anyway, long story short, making sure that your rules, right? So if your minimum size is 1.5% on the short side, right, or 1% on the short side, then making sure that you're not violating that in those core asset classes. But then on the flip side, right, if something's signal strength continues to basically weaken, right, and you also have to be kind of ready and willing to try to increase that position on green, right? So, these green days, and Keith has kind of alluded to it, that, these bear market bounces only last, lately they only last a couple hours, right? So, versus days or weeks or that kind of thing. So, kind of keeping that in mind as well. And I'm not saying, go out and hit the button and kind of, short every ground green uptick, but at the same time, be conscientious as to using all the tools in the toolbox, right? So like reviewing the eyeball table from yesterday morning, and if there's an opportunity on green, or even just sort of like a flat tape, that to go kind of to increase your position if you're at minimum size. And again, I've talked about this, I believe, last week or the week before, but increasing it just incrementally, right? So taking it from your min of, let's say, 1% on the short side to 1.25 or 1.5, that gives you that flexibility, right? To be able to, again, I'm just using random number, but like on a 2% down move, right? You can then, clip some, and you can cover some, and you can pay yourself, right? And you can, continue to compound that capital. And I think there's a really key sort of pivot here, which is where, if you even just small incremental wins, they start to compound over time, and you can kind of use that capital to get larger position sizing in new exposures, right? So again, I think it all really does play off of each other. And I think, if you've missed, I wouldn't say that, again, if you didn't cover it all, right, then hopefully you didn't miss the, 50%, downside move, but, perhaps you miss being, going down 50% at a max size position, right? But, being max all the way down really, again, isn't totally as dynamic as we would be, right? So I think, but again, making sure that at the end of the day, you're understanding your rules, your process, what works for you within your portfolio is crucial. The second question is around, have you discussed position minimums for asset classes besides equities? Keith definitely has, right? And nothing as, I couldn't pull up anything as sort of like outline on the board there as we review each time on this call, on this show. But I did put together mine, right? So generating show that slide if you want. Again, these are mine, but please, you need to do yours, right? You need to set yours. You need to go through what how things look like on your side, right? In terms of again, in terms of what you're comfortable with from a portfolio risk tolerance standpoint, from a volatility standpoint, et cetera, et cetera. But again, really and then also just not violating your mins, right? And when you are down at your mins, you're basically, you have a decision to either get out of the position, and in case of a short, right, you cover it all, or in terms of a long, you're selling it all, right? So, in between your min and your max, you can incrementally add or subtract as you see fit. But again, these are mine, and I encourage you to kind of create your own. These are pretty closely based on ones that I've heard Keith mention. And again, if it's something that's really, really important to you guys, then we can kind of get him to outline those as well. But this is I would say pretty solid outline, and one that's very, very close to how Keith thinks about his as well.